She's a portfolio manager over at Eaton Vance. Nisha, it's great that I have you here because we've been talking a lot about green bonds. Sometimes the market seems like it's a marketing gimmick, but there actually is a real investment thesis to them. So walk me through why you like green bonds now.
Green bonds are issued in the municipal bond market to fund various projects that have a material impact on the environment or society. So for example, a water system could issue a deal to replace asbestos pipes with 100% recycled material pipes that should last over 100 years. Or it could be a utility system that's looking to move towards renewable energy, and they're funding a project to build out wind turbines. Eaton Vance specifically is partnered with one of our subsidiaries, Calvert, a responsible investing leader, to create a framework to not only provide a negative screen and avoid the sectors and issuers that have a negative impact, but to really seek out the ones that have that positive and material impact.
Now, talk to me quickly about Friday. It's our June 1 reinvestment coupon season where you have a lot of demand coming in. Do we expect this season to really outperform now because of that demand coming in?
Yes. So right now, starting June 1st and even over July and August, we're expected to see heavy reinvestment flows coming to the market, to where the amount of reinvestment flows coming in versus the amount of supply should be outweighed about $70 to $80 billion. So we certainly think this is going to help muni performance. And we expect a lot of the flows to go into the short and intermediate part of the curve.
Okay.
That is where investors can pick up the most amount of yield. So if you take a look at the entire 30-year yield curve today, investors can pick up about 85% of the yield just by going out 10 years.
Wonderful. Thank you. That was Nisha Patel.
So why do the bond yields have an effect on the crypto market? Well, what's interesting is the rates are supposed to be going up, but if they go back down, that, in my opinion, will hurt cryptocurrencies. And the reason why is if debt continues to stay cheap, then you're going to obviously get a much better deal investing in equities, and the stock market will continue to go up. I don't see crypto being able to generate as much money or raise as much capital if a lot of debt, which is basically free money created by the government, is going back into the stock market. And like I said, if they can continue to buy back their stocks, a lot of investors will not look at crypto. And the main reason crypto even got all this fervor is because of the ridiculous returns it was producing. And obviously now it's started to flatline. It's still pretty volatile, but if it stays flat, most people will stay away from crypto. And as long as it stays low, it's not like something that everyone's trying to rush into. And like I said, other asset classes will seem more attractive. Now, if the rates go up and the cost of debt goes up, then I see equities and bonds getting crushed, and I do see a large flood or a lot of institutional players wanting to put their money into crypto or a commodity like oil, gas, precious metals. So we'll see. Only the time can tell, but let me know what you guys think about this stuff. Definitely a little more technical. And give me your opinions too on these green bonds. I think it's pretty funny just because I personally feel like the bond market, there's definitely a lot of loopholes, and it'll be interesting too because with cryptos, you may not have to use bonds. You might be able to actually just go through the blockchain to raise capital and to create bonds with smart contracts with crypto. So it'd be really interesting to see how that technology evolves. But let me know your thoughts, your opinions, your comments, and I will talk to you guys soon.